Welcome to Silicon Valley Asian Business Talk.
Hello, everyone. This is Roger Chen from University of San Francisco Center for Business Studies and Innovation, Asia Pacific. Welcome to join our interview program. We want to thank you for the support.
All right. Thank you, Roger. Thank you for inviting me to this session. My background, I grew up in India and came here for my master's in the early 80s in computer science, and then moved to, and that was at Virginia Tech on the East Coast. I then got my first job at Intel. I went to a college in India called BITS Pilani, which is considered to be India's #1 private university for science and engineering. Intel was like the dream company. I was fortunate to get a job there. So about 10 years into Intel journey, you're surrounded by a lot of entrepreneurs here in Silicon Valley. And, I decided to, begin my own journey with a company called Sierra Atlantic. And, that grew to be a fairly substantial size company, about 2,500 employees worldwide over a 17-year period. And, through the course of that, we raised capital from some of the Sandhill Road companies, venture funds. So that's kind of my background as a tech entrepreneur. And I've also been spending considerable time in the nonprofit sector starting 2010-11. Both here in the US and also in India. And a good part of my time also goes into working with tech startups, mostly young first-time founders, helping them build their companies, mostly as an early investor, angel investor, but sometimes I get more actively involved with them, serving on their boards and all that.
Discussion topic: what helped me to successfully build my first company?
So, as you mentioned, you founded and successfully built Sierra Atlantic. Would you please share with us your journey and, more importantly, your lessons of building and growing this company?
Sure. Yeah, I'll be happy to. And, one of the things I, often talk about and I believe in strongly is the power of relatable role models, meaning while being in Silicon Valley and in the tech community, there are a lot of successful entrepreneurs over the years, including in the mid-90s when I started my company, Sierra Atlantic. But, seeing people like Kanwal Rekhi or Suhas Patil and others, Desh Deshpande, these are, some of the names people in the industry would know about, certainly in the Indian American community. And they were like the early entrepreneurs who took their companies public and built fairly substantial companies. So I would say that gave me a lot of confidence when I saw them, building such enterprises, that if they can do it, hey, perhaps I have a good shot at doing it, right? Just coming from a strong educational background and all of that. And, within Sierra Atlantic, in the early years, it is all bootstrapped. It is almost 6 years into the company's journey before we raised venture money from the institutional investors here in Silicon Valley. And I tell people sometimes there's a benefit to being undercapitalized in the early stages. It teaches you some good habits to sort of focus on creating the right value for customers. And frankly, the customers essentially ended up funding the early years in a way, right? But as Kanwal, my mentor, told me back then, he said, hey, but you can't launch a rocket unless you burn enough fuel. So if you really want to scale a company, big time, then at some level, you also have to, leverage the venture capital and, other resources like that. So, that is one of the things, it took me a while to sort of get comfortable with that notion. That is back then. Obviously, now there's a very vibrant startup ecosystem with venture companies and all of that. And so I would say having, a good mentor is very important. And I was fortunate to have a few of them, some of who served on my board and all of that, especially for a first-time entrepreneur. I mean, it's more often than not, they help you anticipate some problems before you get there. And, but at the end of the day, still, you as an entrepreneur have to make the decisions. In fact, I tell a lot of the entrepreneurs that I work with now, part of the challenge is knowing what advice to discard, because I'm on the outside and I can give some pointers, but at the end of the day, it's the founder and his or her leadership team that are going to determine the outcome, more than anybody. So, while I emphasize the importance of mentors, I also wanted to just say, at the end of the day, it does come down to the founder and his ability to sort of gather all these inputs and, make the right decision. And that's why I find most good mentors, they're not very prescriptive with their advice, unless it comes to something about values, culture, team building, those sort of things, I generally don't get too, what should I say, rigid about my input on things. I hopefully encourage them to think about the right issues and all of that. So, but the mentoring, I think, is an important part of it. And then, while product, technology, all of that is important, I think the values, the culture that you create to attract, nurture, retain talent, I think is extremely important, especially as a company starts scaling up. And, the culture and values, oftentimes it flows from the top. So you as a leader have to really sort of live up to those values, whatever they may be that you talk about in your company, right?
Yeah.
Because that kind of determines the culture. And then, there was a book titled Blueprint to a Billion that, the authors studied different companies and that were able to build $1 billion company, not value, but actual revenue. This is almost like 2 decades ago. And one of the things they talk about there when they look at all these companies is, sometimes it really helps to, sort of play in a larger ecosystem. So the partners relationships, it's not just your customers and your vendors and employees, but also, who are some of the key partners that can help you scale. And for us at Sierra Atlantic, I would say at some point along the way, Oracle was a very significant partner that we worked with. So one of the things that worked very well for us is, you pick something that is strategic to this sort of the large company, the gorilla in your space, right? And do that very well and let them market the heck out of it. And that worked extremely well for us with Oracle. We built some of the sort of integration tools and migration tools to help their products succeed in the marketplace. And so their salespeople used to take our, folks into their companies. And when they refer us, that's worth in gold, right? No amount of marketing or sales people that I put in can get me that leverage. I'm not saying it works always, but there is possibly a good large ecosystem player in your marketplace that you figure out if that can is something that you can leverage. Now, of course, it can also be challenging because it's not easy to navigate a lot of these large companies. And sometimes it's a little bit like dancing with the elephant. So you can also get trampled upon depending on what your value proposition is.
Discussion topic: how our startup worked with a large partner.
What are some of the lessons you learned or the best practices you learned to work with very important strategic partner like Oracle, which I think is very valuable for other startup companies as well?
Yeah. I think one thing that we have to keep in mind is as large as each of these companies is, I mean, they're also always on the watch, worried about their place in the market, and they have several competitors. So at each point, something becomes more strategic to them than a lot of other things, right? For instance, right now, I mean, Google, one could argue, is very focused on defending their turf with the search business because that's being challenged by what OpenAI is doing, right?
Yeah.
And so are there things that you can do in that space that somehow help them sort of compete better? For us, it was with Oracle specifically at that time, and earlier with Microsoft, actually had a similar relationship. But Microsoft was not as big into enterprise, at least back then. So they were not that's a strategic decision I had to make. While it helped us get some, credibility because of the Microsoft, we built something around what is called OLE, object linking and embedding back then. And so they took us into they actually had our, people demo within their booth at the large trade shows. With Oracle, at that time, Oracle was putting a big emphasis on, they were competing with companies like called Power Builder, PowerSoft, Power Builder. Not many people may know what that is today, but these are like back then third generation languages to help develop your applications faster. And they were, the market leader, and Oracle was very concerned about it. And, so we gave them some tools to migrate from that Power Builder to the Oracle platform. And so it's a matter of sort of finding, the timing is very important. So they took us into the marketplace, and again, very similar things. Subsequently, they licensed the technology from us for some of their own internal, applications. So I guess, it's finding what is the most is kind of top of mind for the CEO of one of these companies, right? And you actually have an offering that can sort of help them achieve whatever their objective is, because this is all public information. Well, and now, these days it's even more public as to what these companies are doing, and so my sense is, with each one of these players. Most of these large companies are constantly on the lookout for where competition is coming from, and who can replace them and all of that. So by and large, there is always an opportunity out there.
That's great. Actually, you really kind of strongly advocate this kind of win-win approach to help the large partners to improve their business.
Yeah.
How do you balance between working with this giant or being trumped or crushed by the giant? How do you balance that as you dance with the elephant?
Yeah. So again, make no mistake, you have to control your destiny. Don't, these sort of avenues of finding a partner and doing something with them, I think those are all things that can help you get you critical mass more quickly if you do it right. But at the end of the day, you have your product, your idea, and you obviously something that you started with, and getting those early wins and letting your customers speak. So there's no substitute for all of that. Absolutely not. These are the avenues I'm talking about are, important to help scale and maybe get to that credibility early on, if you can find that avenue. So it may or may not work for everybody, but at some point or the other, my sense is there will be enough of those opportunities if you're building a company, especially in my case, over a pretty long time period, 17 years. And you could say that I was one of the slow entrepreneurs to get things done. But, staying in the business for 17 years is also not easy. And so hopefully I've learned a few more lessons there. Yeah.
Discussion topic: right questions/indicators to find product market fit.
What's your view about for many startup company when they search for so-called product market fit, like a very early phase, searching for product market? What are the typical mistakes or lessons that you would like to share with other entrepreneurs? When search for product market fit, that journey part.
Got it. Yeah, obviously there's a lot of, this is a topic that's been talked about quite frequently in Silicon Valley, and I'm sure there are a lot of points of view on this and plenty of literature if somebody wants to look it up. So let me touch upon a few things that may or may not have been out there, and just from my personal experience.
Great. Yeah.
Yeah. Well, one, Roger, when because I mentioned I also do a lot of early stage angel investments. Most of the time, it's actually when the first check the entrepreneurs got from me. So there are a couple of things that I look for, answers to, even before I make the investment. That kind of relates to product market fit in a way. One is, the question of sort of why you? What is it about you as a founder that makes it so compelling for me to invest in this startup? Meaning, what's it about your background that somehow gives you mostly an insight into this problem? First, identifying the problem. Sometimes if the problem is more widely known, maybe an insight into how to solve this at scale and in a unique way that others are not. So that's very important. And that's why oftentimes you see founders coming from, large company like VMware or Google or Oracle that have built fairly substantial size companies, or Cisco or Intel, because they have visibility into a class of problems that most people outside will not. Just because you're at the front lines, especially the people on the customer facing side. So I think it's very important to understand that the answer to that question as to why you, what's it that makes you unique, and then why now. Meaning, is there something happening in the industry, some big change? Like right now, there is so much happening around LLMs, right? Large language models and generative AI. So, or something regulatory. There could be something coming up, with whatever the year 2000 back then, that affected a lot of the industries. And there might be some regulations with the banking finance or with pharma. So I think before you get to actual product market fit, if you have more clarity around those two questions, I think it helps you a lot in getting to the right product market fit, right? And also, once you start your company, your product, and all of that, the reality is the initial deals are all led by the founders. The founder is front and center. You're almost kind of manufacturing the deals, right? Because you're out there talking to the customers, and the customer is sort of betting on you. People buy from people. You might have all the product technology. Obviously, they have to believe that your product is going to solve their problem, but they're also sort of trusting you with, and there is bound to be a lot of tweaking in the first two through the initial customers. And so I think, product market fit, as somebody said, is like finding the resonance with your, customers, your technology, and, everything else. And and once you get to the, so sometimes, I mean, one of the companies I've been working with, they found they had, we believe, what's a great product. I guess it's proving itself out now. But they had a product that they were selling into the banking, financial services, mostly the large banks, insurance companies. And then, but it is always a bit of a struggle to, scale that. And the CEO had to be involved in almost every deal and all of that. And then they found that the real market fit was actually in an adjacent space, more broadly financial services, but in the credit unions. So it took them about, I would say, 5 years to get to $1 million ARR. And the last 3 years, they went from 1 million to 25 million.
Wow.
And again, so look for, you may have the right idea, but there may be a segment within that broad industry. Sometimes it may be even a different industry, but, where you might find the right product market fit. So a lot of it comes down to the CEO sort of staying engaged, listening to the customers, tweaking things. But when you get to that point of resonance, as I talked about, then your customers will start referring you, right? In fact, if your customers are not referring you at all, I would say look closely. Maybe you don't have the right product market fit, or you're not engaging your customers properly.
Discussion topic: lessons and wisdoms to help scale up new ventures.
What mistakes have you observed that companies or new ventures tend to make in managing this scaling up or growth phase?
Okay. So, yeah, one of the, things I've seen kind of relates to the previous question also is, people end up hiring a bunch of sales marketing people before they get the product market fit. They get
Too early. Good
VP of
point.
sales, and you start thinking it's a sales problem. It's not really a sales problem. You don't yet have the product, right? That's one of the things that I've seen, especially when they get access to that capital, whether it's angel money or institutional investors and all of that. So I think that's one of the more common things in the early phase of this scaling. The other one I've seen is a lot of founders, especially the ones that come from a technology background, from engineering or even marketing and all of that, they do a pretty good job of building the right product, getting to the market, and all of that. But they more often than not don't give the same kind of priority to the finance functions, in particular a good CFO. It doesn't have to be a CFO, but at least VP finance and at that level. And because the reality is there are so many other aspects relating to scaling a business that come from having a really good fiscal discipline and having the systems and processes in place. And frankly, a lot of VCs, when they look at your company, you might have a great growth and product and everything, all of that together, unit economics and all of that. But oftentimes having a good seasoned CFO or at least a head of finance, a VP of finance, something like that, is a very important part of how they evaluate companies, kind of building the confidence with them in terms of their decision to invest and all of that. So I would say that's a pretty important one. The other thing is as you start growing, there's always some tendency to sort of start dabbling in more adjacencies or something else. But I'm a strong believer in focus. Unless your the available market is not large enough, you just want to be the best in that. And, you want to be the number one choice, not just today, but, kind of look ahead for the next 2-3 years. And, so when new technologies come, maybe there are things that you can leverage those new technologies. Like, again, back to this, what's happening with the entire chat GPT, the OpenAI, the LLMs and generative AI, right? I'm almost asking all my startups, to just at least understand if and how that may impact their business and what can they do to sort of strengthen their product line using, these things. And that comes from having the focus on your customer and, which industries you serve. But those are, something that I can think of. And one, personally, a mistake I myself made is, I mentioned the Hitachi bought a company in late 2010. But before that, Roger, we did 4 acquisitions.
Atlantic, your company did 4 acquisitions.
Yeah, that's right. We bought 4 different companies before Hitachi bought us. And so for a long time, I was hesitant to think of acquisitions as a way of growing. And, I had this sort of concern about, because I was always big on culture and I was worried about, hey, how would that disrupt my culture? And it's a distraction, all of that. But the reality is scale does matter, at some level. Again, since we're talking about growth stage and everything, customers do care for, the size of the vendor partner that they're working with. They want to make sure they're reliable, they have the staying power, and all of that. So M&A actually gives a very positive signal to your customers, but frankly also to your employees. So I think that's a mindset change that the CEO has to go through. And Yeah, kind of relating to that, I always used to feel, I still say that the CEO, personally, I felt I can be the biggest asset or the biggest liability to the company, depending on how well I learn and grow. Because the CEO that took the company from 0 to 1 may or may not be the same CEO that can take it from 1 to 10 or whatever, right?
Yeah.
And a lot of that depends on how well the CEO sort of continues to learn and grow. And of course, a big part of that is bringing people into the team that have gone through that process and letting them sort of succeed big. Yeah.
Do you have any other kind of a wisdom or advice to share on scaling up new venture companies?
I mean, these days, because you also have a lot of founders or startups that that originate in other geographies, like say I mean, I work with a lot of them that come out of India. I'm involved with an initiative called Falcon X that is focused on nurturing supporting entrepreneurs that move from other parts of the world to Silicon Valley. And some of them Eastern Europe, some of them Latin America, but India is a big part of it, of course, Korea and other places. And the startups from Israel have done a very good job of this, by the way, of the ones that I'm aware of. And that is relating back to the question that you were asking, in addition to the things that I touched upon, the CFO and focus and M&A and all of that, is also the founder. Oftentimes, when they're coming for a company originating in other geographies, sooner or later, my recommendation is that they move to the US, in particular Silicon Valley. It doesn't have to be Silicon Valley, but I think this is a pretty good place because still the knowledge on how to scale companies rapidly, there's no place in the world that has that sort of expertise and that talent that you can sort of tap into as here. In general, I would say they should move closer to the market. I mean, I'm been part of a company where I wrote the first check called Gray Orange that is now an industry leader in warehouse robotics. And so the founder, brilliant guy, young founder, he built a fairly substantial size company now. I mean, it's all public information. They have raised a few $100 million. They're at a fairly large scale. And so he moved from India to the US because this is, he had to be close to the market. And then, things have changed dramatically for the better once he made that shift, right? So I guess that's one more thing I can think about in terms of scaling, especially for, startups that begin their journey somewhere outside the US. As long as US is the main market, which it is for majority of these companies, at least selling in the enterprise space. The B2C, India and China have large enough market opportunities, and but in B2B, I think this is still the mainstay.
Yeah, I think that's an excellent point because I met other entrepreneur, for example, from Southeast Asia. They say the exact same thing. They say they have to come to the United States market because the scale. That'd be great.
And the other point relating to that, sorry if I'm kind of going back.
No, please, please.
Since we talk so much about product market fit, that's another thing that I say. Product management in particular, maybe it's a biased view, but I strongly believe they should be not just in the US, but in Silicon Valley. Product management, because there is so much that happens, the rapid change and all the conversation, the networking that happens in Silicon Valley. I don't think there's any other place, especially as it relates to product management.
Discussion topic: culture building for startups. When? What type?
Now let's talk about your expertise, because you mentioned you helped a lot of young startups to consider about the culture. So I have several questions. First question is about a timing. When you think is a good time for startup leaders to, maybe already answer that question, to pay attention to culture building? Is that before product market fit or after product market fit, or it really doesn't matter? They should, kind of consider that important issue right away when they start the company. What's your view on that? When to pay attention to the building the culture for the company?
Yeah, yeah. No, I think it really starts on day one. As I mentioned earlier, I think the culture sort of flows from the top. In my case, I mentioned we were at about 2,400, between 24 and 2,500 employees at the time Hitachi bought us. But at about 50 employees, when we reached that stage, I actually said, okay, I think we all have some understanding of what defines a company culture. And to me, the core values are a big part of talking about it. And then I had one of my early employees in the leadership team start an initiative within the company to sort of engage our employees and come up with some of the values that we thought we should emphasize. But in that, I said there are a couple of things that are non-negotiable for me. One is trust, because unless you have that, and this is not just with your customers and employees, but also with your partners, vendors, investors, right? Your shareholders and others. And second is one that I grew up with at Intel, is the focus on results, which is effort is good, but results is what matters at the end of the day. And starting with me as the CEO, all of us need to be accountable for what those results are. And, so in my mind, that's not something that you get to at some point later. And it's not just something that you put up on your walls and all of it, but it's something that you have to live each day. So the decisions you make about how and who you promote, or who you recognize, and who you let go. I mean, there are some people who may be performing at a high rate, but they might not be the people that others want to work with, or the bad apples in some sense that don't reflect your culture, especially on matters of integrity and other things. Then there's no place for them, because people are smart enough, they know that. And when you tolerate that and let that sort of get into your organization, and also mentioned earlier, people buy from people, and so your customers get to see that too. So it needs to be genuine and not some just words that you put up on this thing. I would say right from inception.
That's great. Actually, I will kind of have two follow-up questions. The first question relates to, you already touched on some of these issues. Because to me, organization culture is just like a personality. People say there's no like a right, wrong personality. So following that, my question to you is, do you think, is there such a thing as so-called the right or wrong culture, organization culture, or good or bad organization culture? Of course, we're not talking about the common sense criteria as you talk about like customer service, integrity. So in other words, what's your advice for like the young startup founders, leaders to follow when they try to build organization culture for their nascent organization? What kind of culture is good, or is there such a thing called a good culture, bad culture?
Yeah. I think it's not that important as to what makes up those sort of your values and the culture, but it's much more important that you follow that and you live those values. Once again, starting from the founder. For instance, if I were doing a startup today, maybe I'll talk about speed as an important element of it. I did not have that necessarily back then, so I think it depends on the founder. At the end of the day, those are representative of who that leader at the top is, of his or her value system, and his or her sort of intellectual synopsis of his or her learnings, ideas, and all of that. And if at all, maybe expand it to the leadership team. The first, whether it is the 3 founders that started the company or, the 5 people that make up the early leadership team, I think each of them has to strongly believe every word of what they describe as their values and kind of live that, because the rest of the people do follow that. I mean, it's a little bit like, parenting, right? We can teach, we can tell all the things to our children, but they learn much more from our actions than, what we tell them, right? So I think it's far more important, and every family, every parent, have a different way of bringing up their children, and but there are a lot of things that are common amongst good parenting, and I think the same thing goes for good cultures.
Yeah, that's great. Thank you. So the other small question is, you talk about founders or startup leaders should pay attention to cultural building from inception. So even before product market fit. So my question to you is, if it is before product market fit, will the uncertainty, will the change of the business direction and also the ramifications of those radical changes will make it difficult for companies to build certain kind of a culture because of the pivot, because of a change? Let's just, ask your thoughts on that question.
Yeah, no, that's a very interesting question. In general, my sense is people don't expect miracles from their leaders, right? But they do expect them to be transparent and, communicate, right? You can never over communicate. So, and then you'll find that, once people see that you are respecting their sort of, intelligence, confidence, and you're being transparent with them, they will become a very big part of the solution, whatever, whether it's a pivot, like you said, and frankly, some of the most difficult decisions I had to make as a CEO was when I had to let people go, right? Because, having run that's one thing about, one thing that doing a business for 17 years, building a startup for 17 years teaches you. So you're bound to go through at least one big, if not in my case, 2 big economic cycles, right? And one was, of course, the dot-com bust, and then the 2008 economic crisis towards the end of my journey. And those are some of the most painful decisions I had to make. But it doesn't mean that, it's a bad culture just because I have to. I'm running a for-profit business, but what is important is to be very transparent about it, and talk about, that, and you don't want to go too far, without communicating about these issues. By and large, as a leader, hopefully you get an early indication of where things are heading and all of that, right? Now, some big events do happen externally, like the 9/11 or that's. But then again, if you communicate enough with your people, I think they understand, and they'll, you're never saying you'll never let people go. Of course, some people have done that with their companies, and if it works for them, that's well and good. But I think most important thing here is being transparent and communicating, openly. And once again, like I said, people don't expect miracles from the leaders, and they just expect this sort of transparency. Yeah.
Discussion topic: risks and solutions to maintain growth momentum.
Okay, so next question is about startup companies' approach to risks after they found product market fit. Obviously, most of startup company, when they start, they tend to do what we call the radical innovation, disrupting the existing business. But once they find their initial product, initial market, should these companies continue to pursue very different, very risky innovation products, which tend to be high risk, high return? Or should they focus on more incremental, adjusting their existing products? Or under what situation you think a company should pursue these different type of kind of innovation strategies. So what's your thoughts on that?
Yeah, that's an interesting question. If you look at the tech industry more than any other, I mean, just there are very few that have sustained kind of a leadership position beyond, say, 30 years or 40 years, right? And almost by definition, there are so many big disruptions that keep happening in the industry that come mostly from the startup world. So it's hard to say. While I'm a strong proponent of sort of staying focused on your markets, customers, and all of that, and your product. I mean, the reality is you have to look at the adjacent space. I mean, that's where I think, some of the companies have done a much better job of it than others with the M&A. I mean, you could argue a lot of Cisco's sort of continued leadership has actually come from the M&A that they've done. And I mean, Facebook, you could argue got much more out of Instagram acquisition than their core this thing, if they stayed just on their core this thing. And Oracle certainly with the Siebel, PeopleSoft, and so many other acquisitions. And that is not always a strategy, right? So I guess I have a little bit more of a bias towards, and then Hitachi. After Hitachi bought my company, I served on different Hitachi company boards and drove acquisitions for some of their companies in the payment space. So I've seen that, now Hitachi is a very different culture, very different sort of a mindset, large Japanese company. I have more of a bias towards acquiring smaller companies and giving them the freedom and sort of creating more of the entrepreneurs within your large company as you start scaling.
Okay.
That's but and as opposed to trying to rely on your internal teams to continue finding new markets, new things. But I mean, that is just my sort of.
Actually, I think, what you talk about, because you give us a lot of example, these are really very powerful example to demonstrate your point, meaning as these new companies grow or expand, the reality is they have to face some uncertainties. And you mentioned many of these companies using acquisition to manage those kind of uncertainties or risks, right?
Yeah. And then again, Roger, since we talk so much about culture, people, some of these companies have clearly done a remarkable job of integrating these acquisitions. It's almost become like a, sort of a well-run, well-oiled machine. Like Cisco, I would say, is one of those. And there again, I think it comes down to, the leadership. I think John Chambers, to his credit, was a fantastic leader. Because, especially in the first 6 months after an acquisition. Now, a little bit of my personal experience having gone through 4 acquisitions, but that's pretty small. I mean, number of acquisitions we have done compared to large companies. It's all about the hearts and minds of the people, in the first 6 months of the company that you buy. So one of the practices I used to have, was after we bought the company, when I do my all hands meeting, I would always go to the site of the new company because most of them were like small tuck-in acquisitions. They were typically in the 10 to, at most 20% of my company revenue at the time we bought them, right? So they were a much smaller company in terms of employee base and all of that. So I would go to one of the companies we bought was in London. So I went to London and ran my all hands meeting from there. So the rest of my organization knows how important that is. And, it's not just up to me, but, and likewise, one company was out of Charlotte, so I did the same thing. And one was in China and Boston, so I ran that out of China. So again, I'm just thinking about it as I reflect on your question. Yeah. So it's not just doing M&A as a strategy, but also how you do it and doing it right.
Yeah. That's a great point. So there's actually, from the business perspective, the reality is you have to feel comfortable dealing with the risks causing by the change or the growth pain. But as you mentioned, the key is how do you manage those things, right?
Yeah.
Discussion topic: how do I select early stage ventures to invest?
Have you made a kind of mistake or misjudged the new venture market opportunities? And if the answer is yes, what's the lesson you learned about evaluating the new venture market opportunity? And so, what's the criteria you're following now when you evaluate venture
Yeah.
opportunities?
Yeah. So my investments, Roger, have been primarily on very early stage, seed stage
Yeah,
startup.
very difficult.
Yeah. Those are
Yeah,
very high risk, and I'm lucky if one out of four of them end up being successful, and hopefully two or four will give some kind of a return, and one will give the nice return that makes up for the overall investment, right? And so I don't have enough. I certainly don't have any experience about investing in later stage as much. But one thing that I have learned over time is my bet is really on the founder. You know, uh,
oh,
far more than which market, and I don't consider myself to be smart enough to understand all of those things. I mean, you have a general sense of some big disruptions happening, or some demographic trends which we all know about, like the aging population. So the baby boomers retiring, for example, and things happening that'll come up in healthcare. And so you have those that everybody knows, broadly speaking. But at the end of the day, the bet is really always on the founder, on his ability. Can they excite me enough? Are they educating me on some things? And are these people that I feel I can trust? Because the integrity is extremely important no matter what. And uh, and oftentimes, we talk about mentoring. Uh, so when I work with these young founders now, or first time founders, uh, you know, I'm learning just as much, if not more. So mentoring is a two-way street. So I think that's also very important in how you look at these opportunities. Yeah.
that's great. Actually, let me kind of follow up that question. So basically, you say after so many years of your investment, even angel investment journey, you bet less on the product on the market and bet more on the founders. You
Absolutely.
also mentioned several characteristics such as the insights, whether the founder can teach you something, the integrity. Uh, do you have any other things to share? What do you really bet or look for the founder to make you say yes or no, beside the things you already talked, which is
Sure.
very, very important.
Yeah. So one of the things I talked about very briefly in the earlier part of our conversation was about looking for answers to these two very specific questions when somebody pitches to me. One is, why you? What is it
Mm,
about your background that somehow gives you unique insights into this problem that you're going to address with your product? And both understanding the problem in a certain level of depth that others may not be, and second, if it's not understanding the problem, even if it's more broadly known, uh, having an idea, having a unique approach to solving this problem at scale, right? So that's the
mm,
why you part. And then why now? Is there something happening in the industry, not necessarily already happening, but that you anticipate happening over the next few years? Because you are betting on the future with any startup. And so I would say I have to get a clear answer to those two questions. And if it's not already in their pitch, I try and sort of get to the essence of that. And but the reality is, at the end of the day, I recognize I'm not going to get them all right. And if I get even half of them right, I'm probably doing better than I'll be in the top 10 percentile, right, of angel investments. But it's also emotionally very rewarding when you work with these first-time founders, especially, and when he or she goes on to build a substantial company of scale, I mean, it's a little bit like you bring up your children and they do very well, and there's joy in that. So I'm not, For me, of course, the financial returns is is important, but the joy of seeing some of these founders grow. I mean, like the one that I mentioned earlier, it took them 5 years to get to the million ARR now, and that is a real struggle. I give a lot of credit to the founder for staying through that, and I consider myself lucky now. I'm also part of his journey as he taking it from 1 to 25 in just 3 short years. Yeah.
Discussion topic: Startup CEOs, key abilities beyond leadership.
Because you mentored many CEOs or founders of startup company, I have some question relating to that. What differentiates good or some kind of effective founders or CEOs versus bad or ineffective founders or CEOs? After you are kind of a experience working with these people.
Yeah. One of the characteristics is, whether you like it or not, as a CEO, you're always selling. You're selling to your investors. You're selling to your early employees that you're trying to recruit. Obviously, to your customers and to partners that you want to engage with. So somebody who has sort of good persuasive skills, he or she, they kind of stand out, and I think they tend to be more successful. I mean, they don't have to be glib talkers. That's not, being persuasive or selling is not about sort of being super articulate with something, but having the clarity of thought and being able to, communicate in a reasonably effective way. And we talked about sort of the value system. That to me is sort of base level, but ability to sell, I think that's very important. And also, are they good listeners? And do they have the ability to to take ownership of things and not kind of say, oh, somebody else did this, that's why I couldn't do it, right? At the end of the day, the buck stops with you. You're the founder, you're the CEO, right? Always like somebody who says, hey, I missed out on that, I didn't see that coming, or that's why we couldn't do this, or something else like that. Because we are all human. I mean, none of us are perfect, and we are continuously learning. But I think having that honesty, that intellectual honesty, I think is important. Yeah.
Discussion topic: 5% to 95% talent rule in building startups.
For many young or inexperienced startup founders, CEOs, what are the common weakness you observed? For these young kind of let's say first-time founders, CEOs that they need to work on. What are some of the common weakness? You tend to coach them. You tend to help them because they need help in those areas.
Yeah. I mean, just partly even looking back on my own experience, right? You really underestimate the importance of just having those few key people that can make or break a company. We often talk about this Pareto principle of whatever 80% of the value comes from 20% of your effort, or all of that, right? But I would say in case of building companies, it's probably 5% of the people that give you 95% of the value for the company, right?
Oh,
yeah. I mean, that's just my, making sure you have those key 5 people. And this is not to say that other people are not, they all have to, but if you don't have those 5 or 6 or 10 people, whatever, in the, as you get to be 100-person, 200 people company, it's very hard to take that out. I think Bill Gates actually said once, if you take the top 10 people out of Microsoft, will be just another ordinary company or something like that, right? I forget what number it was, but it is something like 10 or maybe 20 at the most, but not beyond. So I think that's very important. So your ability to constantly look for, attract, nurture, and retain that kind of talent, right? Because that sort of high caliber talent won't stay with you unless you give him or her the right reasons to continue. And uh, and then the other thing we already talked about is the importance of having a good head of finance, CFO, because we often talk about technology, product market fit, and early customers. All of those are extremely important. And but if you don't have that right finance function, and this is not in the very early stages, this is as you get to Series A, maybe past Series A, even, yeah.
That's a great point. So Mike, actually this is very insightful points about the critical assets. Let's call that critical assets, like a very few critical people who will break or make the company. As a founder, as a CEO of a startup company, how do they know what are the indicator they need to pay attention to say, hey, I got these critical mass, even though it's kind of very small number of people, and still need to look for these kind of people. What are the indicators they need to follow? And also you advise them to work toward that direction to get these critical assets, ready in the company.
Yeah. I mean, the nice thing about startups or any of these for-profit businesses, your market tells you whether you're on the right track or not, right? So if your customers are, buying into whatever you're pitching to them, or once you, of course, once you reach milestones like a product market fit, I think that tells you how well your overall team is functioning. Now, you could assemble the most talented people and sometimes not get it right because of something happening in the market. So, I mean, that happens, right? In fact, there are founders. I told one of them that, hey, that didn't work out. Where I invested and I was on the board along with some of the most well-known VCs like Sequoia and others who were on that board. But I said, hey, next time you do a startup, I would definitely want to, invest in you.
Wow.
Yeah. So, because I really like this person as a leader and how, he's sort of built up the team and everything. But you could get it wrong. I mean, that doesn't, because there's something that happens in the market and, time will tell.
Discussion topic: Asian/Indian culture, heritage, and entrepreneurship.
I would like to know whether you're kind of an Asian or Indian culture heritage, including your philosophy, your background, your history, affect the way you approach entrepreneurship activities. What's your kind of thought on that?
Yeah. I think one huge advantage we do have, by and large, I think all Asian cultures have a very strong family support, and and we sometimes take it for granted, but that is a huge help for me when I was starting my company. And my wife, she quit her job, and she was taking care of the kids, and so
like a family support, you mean?
Absolutely.
But that's a very risky support when you start.
Yeah, but it's in the early days, she was actually, I shouldn't say right on day one, but as we got to a point where we were sort of stabilizing, and so in the very beginning, yeah, she was the one who essentially put the food on the table, and of course my savings that helped us get started partly. But yeah, I think for most of us that's a huge advantage. And then I would say in my case, I think my early childhood, we talked about the values, culture. I went to a military school, before I went to college. Military school, as in they mostly train you for the armed forces in India. And I was a misfit for the armed forces. I couldn't, but then I always felt that early years were very important for it shaped my personality. So it is a place I sort of, I guess, learned the importance of sort of team above self and the focus on integrity and all of that, right? And I often say values come early in life. It comes from your parents, your surrounding family, which, in Asian cultures is very strong, or your school, your teachers, and knowledge and wisdom comes later in life, right? Uh, I think the values, the culture, since we talk so much about it, is also an important part of, something that, in my mind at least, is a big advantage for people of Asian, Indian cultural background. And now, fortunately, we have role models in our communities, right? I mentioned that right in the beginning about the power of relatable, positive role models. People like Kanwal Rekhi or Deshpande or Suhas Patil back then, but now there are, several of them who have succeeded big in building fairly substantial size companies. Uh, so it starts, in your mind at least, people can envision that they can indeed become, as successful as any of them. And and the quality of the entrepreneurs that I'm seeing, especially out of India, which is where I spend a lot of time, some of them are just comparable to the best that I see in Silicon Valley now. And
Great. So
yeah.
then, you're talking about the advantages or benefits of Asian culture or Indian heritage on your entrepreneurship activities. But let's look at the other side. Do you see some kind of a disadvantages or challenges caused by the Asian culture or Indian culture background in the entrepreneurship activities?
Yeah, I think most of the time, it's sort of the market-facing functions don't come as naturally to us, and also we, I think. One of the things that I often, this is not just about entrepreneurs, but when I'm mentoring some of the young people, I'll tell them to get involved in the community in whatever thing that interests them, right? Volunteer someplace or, and that's something in America, it's fantastic to see that, the kind of engagement in the civic society, right? The average American family has compared to the immigrant families. And, just personally looking back at my own experience, some of my best relationships, professional relationships, including the lot of startups that I've invested in, have actually come through the nonprofits that I was involved in or something in the community, right? And I think there's a lot that we can learn from the American system, the civic society, in terms of taking active ownership and things like that, getting involved in the community. That's something that I tended. The other thing is also giving people a second chance. Sometimes we tend to be a little bit more judgmental about it as Asian cultures. For a long time, people scorned at failures, and startup is full of failures, and that's why there was a big discomfort about being a founder entrepreneur, and things like bankruptcy laws or anything else in America. You see that oftentimes. I love that about the society here, right? They give you a second chance, irrespective of how serious a mistake it might have been that you were part of. So I'd say, those are the two things that strike me as, that the Asian cultures and, entrepreneurs coming from the background can and should learn from. Yeah.
Discussion topic: reflection and advice on entrepreneurship journey.
Do you have any kind of stories or interesting anecdotes that happened in the past that give young kind of Raju Reddy, some memorable, insightful lessons about starting and building new ventures?
I certainly made a lot of mistakes in, hiring salespeople and all of that. And like I mentioned, I was also slow in recognizing the importance of, M&A and things like that. But one of the things is, I think you need your quiet time as a CEO. So for me, I I used to do a fair amount of swimming. That's when I had my quiet time, and it allows you to think. And so even when I traveled, I always, which I used to do a lot of, I'd always try and find a hotel that had a swimming pool, so I could just, when I go there, it just, gave me sort of that break from the intensity of, the job demands and all that. So just make sure, I would say, staying physically and mentally, fit, I think is very important, because, as I mentioned earlier, you are the biggest asset, or you can also become the biggest liability for the company, depending on how you learn and grow and, stay healthy and all of that. And other thing is, you never know when the opportunity knocks, so be ready for it. For example, Oracle came to us because they found they licensed our, they actually gave us a contract for building what they call the Oracle process manufacturing back then, largely because we were able to automate a lot of that. They bought a company called GEMS back then, Data Logics. Sorry, that was the name of the company. Product was called GEMS, and they were doing their own internal analysis of whether they can do that migration from whatever the GEMS architecture to the Oracle architecture on the database and the UI and everything. And they came to the conclusion, by going with a third-party product, which is what we had, they can do it much faster with a higher reliability. And I wasn't anticipating that. I had no idea Oracle is in buying that company, but when that came, we were able to react very fast and jump on it and go. And same thing, Agile was a company that was a market leader in product lifecycle management, and they were upstart. Later on, they became a public company, but when they were getting a lot of traction, when they were selling into accounts, they found that they had to integrate with Oracle, SAP, and otherwise the solution was not complete. And they came to us because we had some history with Oracle, and and that product later on, Oracle bought Agile, and even today, almost 20 years later, I'm surprised Oracle still pays license for that to Hitachi, which of course owns Hitachi. So I guess the message there is more about be ready, especially when you go past sort of the very initial stages of PMF and all of that. You never know when that opportunity might knock, and
it's interesting. It's an interesting point
in the market space, and
that's great. Actually, I even heard a NVIDIA, their CEO was talking about the AI. They didn't discover the AI opportunity. AI opportunity found NVIDIA. That was from the CEO or founder. Interesting.
Yeah.
So
and then don't forget, at the end of the day, we talk so much about technology, IP, PMF, but it is a people business. It's a people business, so don't underestimate that. So all the things that you as a founder, leader need to really understand and sort of, work on to attract, nurture, retain great talent, I think is going to be a huge differentiator.
Discussion topic: startup exits, IPO or merger and acquisition.
IPO, acquisition, these are two common successful exits. So I am not sure, if you have any kind of thoughts on the difference of building these two types of a company, like building acquisition target versus building IPO company. Are there any kind of a difference in building or growing these two type of a companies, or there's no much difference?
Yeah, I know a lot of people, have a perspective that may or may not be in sync with sort of my view on this. I always felt you have to build a company to be a high quality public company someday. Then the right things will happen. Don't worry about whether you are a good acquisition candidate or not, because all the things that go into building a high quality public company, sort of a, character, if you will, of a company, I think are the same thing that'll also make it attractive as an M&A candidate. so don't focus too much on IPO or M&A. Then that would be my view. But oftentimes in the technology space, people do talk about, okay, here are the two big likely buyers for it, and well, that's great if that happens. But there may be other buyers that you're not seeing because they want to get in this space or something else, right? And for all of them, the more you look like a well-run, well-oiled machine that has a predictable revenue engine, the right culture, customer retention, the obvious unit economics and all of that, then yeah, that makes you very attractive for an M&A. Yeah, whether IPO happens or not, and so that's what I would say. Yeah, but
That's
it's
great.
true that a lot more companies get their liquidity exit through M&A than IPO. No question about it. Yeah.
Discussion topic: how to create and work with startup boards.
You have sit on the boards of many startup companies. What are the common mistakes or lessons that you want to share with the startups in their relationship of working with the boards?
That's a very interesting question. Yeah, very important point, actually. Yeah. So a few things that come to mind. One, always put out the bad news first. Don't hold on to the bad news. It's okay. I mean, the board members, like we talked about, they don't expect miracles from your employees, don't expect miracles from your leaders. And same thing from board members too. Especially if you've got a good board. And I'll come to that just in a minute. But, so don't hold on to the bad news. And that's bound to be. I mean, this is startup. This is all risk capital. Keep that in mind, And so people who invested in you understand that. If they don't, then, it's unfortunate you got the wrong partners. The other thing is, I tell a lot of entrepreneurs, always try and get at least one person on your board, if you can, who ideally has built a company.
Ideally what?
Ideally has built a company, has done a startup, who has been a CEO somewhere, or at a minimum, some strong operating experience, because, I mean, there are a lot of, smart, hotshot MBAs, and no disrespect to anybody, but you need that empathy for the entrepreneur. Unless you've been in that role, you are not likely to have that, same degree of, success in that relationship. And yeah, I just, in my own journey, I've seen, much better value from having people on my board who have actually been entrepreneurs themselves, have built companies. And yeah, they tend to be more, what should I say, much more accepting even of the bad news, right? I'm not saying there are plenty of very good VCs and, really smart guys out there that have not built companies. But when you have a mix of a board like this, when you have at least one of those people who has built a company, I think it makes a big difference to the entire dynamics of how a board operates also, right? So, I mean, those are a couple of things that I can think of. The third is, in the board meetings, we talked about, how the outcome of the company comes down to really the CEO and his or her leadership team largely. But for you as the CEO, it's a great opportunity to build more accountability within your team when they present to the board. So use that as an opportunity for some of most boards, of course, do have people from the leadership team come and present, but not all of them do as good a job of that. And the CFO is always there. But, I would encourage people to get as many of your leadership team onto the board meeting presentation, not every board meeting, but, once in a while through the course of the year. Those are a few practices I can think of. Yeah.
Thank you for watching.